As I've always said, is crypto markets are volatile by nature. It's a 70% volatility asset class. It has deep drawdowns and it has tremendous upside. In fact, it's the best performing asset class in all recorded history. But with that best performance comes volatility. It's something I warn about in this don't fuck this up thesis, which is don't take leverage. Don't try and trade around or FOMO into stuff. Just be careful what you do and stick to the basics, stick to the bigger tokens. If you're going to degen into stuff, do it in the smaller stuff because that stuff's much more volatile. Your probability of getting it wrong is very high, although you can get 100x in the space as well. I understand that's attractive to many people, but I'm trying to keep everybody on the straight and narrow. And when you see these drawdowns, it always feels terrible. And I've been doing this since 2013 and they always never feel great. But the reality is it's normal. So it's normal in the fact that in the last 12 months, you've probably forgotten this, but this is our fifth or sixth 20% pullback in Bitcoin.
The regulatory crackdown on cryptocurrency firms persists in the United States, casting a shadow over the industry's future. Regulatory agencies, such as the U.S. Securities and Exchange Commission, SEC, remain steadfast in their efforts, posing potential threats to the growth and development of the crypto space in the U.S. Earlier this month, Uniswap Labs, the creator of Ethereum's largest decentralized trading platform, disclosed that it had received a Wells notice from the SEC indicating an impending enforcement action. This notice, akin to those received by Coinbase, Kraken, and other crypto-related firms in recent months, warns Uniswap of potential enforcement action for allegedly operating as an unregistered exchange and broker-dealer. In response to the Wells notice, Uniswap Labs founder Hayden Adams expressed a mix of frustration and determination, stating, "I'm not surprised, just annoyed, disappointed, and ready to fight." He anticipates a lengthy legal battle, potentially extending to the Supreme Court. Uniswap is not alone in its resistance. Recent reports suggest that Ethereum developer Consensys has filed a lawsuit against the SEC, contesting the regulator's jurisdiction over Ethereum. In the face of mounting regulatory pressure, voices within the crypto community are speaking out. Real Vision founder and CEO Raoul Pal, in a recent interview, offered insights into the regulatory landscape in the US, contrasting it with more crypto-friendly jurisdictions like the UAE. Pal suggests that the aggressive crackdown serves as a smokescreen to compel investors to keep their funds within the traditional financial system, potentially driving developers away from the US. As the battle between regulators and crypto innovators intensifies, the future of the industry hangs in the balance, with stakeholders preparing for a protracted legal struggle to defend the principles of decentralization and innovation. Now, let's continue with Raoul Pal discussion.
There's another piece of magic coming for next year that's not on people's radar screens, which is Basel IV. Basel IV, the Basel agreements are basically bank capitalization regulations after the banking crisis. They imposed Basel III, which meant people had to hold more regulatory capital. That is code word for owning more government bonds. Basel IV is going to tighten that even further. So they're going to force the US, the UK, and the European banks to hold more government bonds. How convenient, because you need a buyer of the bonds to add liquidity into the system. And so that is coming. It starts with Europe, I think, in January 2025, and the US and the UK will come by about June, July 2025. So there's liquidity coming in the system at a structural level, i.e. they're creating another larger buyer of bonds. We will see more of those kinds of things over time, and we're going to get much more liquidity. But this is just the Fed. Over in Europe, well, the ECB want to start cutting rates soon. That's going to start injecting liquidity into the market. They're also still planning their big green energy initiative to lower the cost of electricity in Europe, which is actually good for productivity. I know people think it's a waste of money throwing money around at green energy activities, but it's not, because over time you'll force down the cost of electricity, and that increases productivity and that helps GDP grow. But in the meantime, they will end up financing more of this with issuing green bonds or whatever it is. There's going to be a way that they will inject liquidity via this as well, because they don't want to use the balance sheet if they can avoid it, because everyone knows what the balance sheet is, the printing of money. Okay, so Europe's probably in the equation. The UK is similar. They blew up their gilts market last year, They will do some injection of liquidity for sure, whether it's via rates or whether they can find a backdoor excuse to do something else. Obviously, Basel 4 for all of these helps. Japan has got a real problem on its hands. Its currency is falling fast, and there's very little they can do. They don't want to raise rates too much because their GDP is too slow. They've got the everything code issue at hand as well. So they've got this problem. China's also got the same problem. It's starved of dollars. It has a bunch of dollar debts. It has a debt deflation going on, particularly in the property sector. It's an unbalanced economy. They need dollars, and they can see Japan losing control of its currency. They're nervous about that. Janet Yellen's been over there twice because she's worried that if China devalues, they're going to dump deflationary goods onto the US and create other problems. So somewhere here, there needs to be an injection of dollar liquidity into the system, whether that's via swap lines or some other backdoor mechanism to alleviate the strength of the dollar. I think that's going to come as well. And China itself will probably inject liquidity into its system in some way, shape or form. Everyone's been asking them to do so. They will have to do something over time, but they can't do it with the US interest rate so high, because if not, currency goes. So it's this problem. There's a bit of negotiation. We got a G7 meeting coming up in May. So we may see some noise around foreign exchange markets and some change there. So look for a change of sentiment coming out of that. Look for a change of sentiment coming out of the bond market. Jay was very cautious not to say we're going to be raising rates. He really, really wants to cut rates because they know they have to finance the deficits. That air pocket of Janet's bank account growing and Jay doing QT had caused a decline in liquidity. That decline in liquidity is what caused the decline in crypto. Now, Jay went clearly today to say they want to reverse some of that, and Janet's going to start reversing some of that, and then she'll start spending it. So the forward-looking basis, liquidity is going to come back. Is it going to be this month or next month? I don't bloody know. It doesn't really matter because we're not in it for the short-term trade. What we know is it has to come back because of the everything code and the financing of it. If you've not seen what the everything code is, then please go through the YouTube channel or on the Real Vision platform and look for the everything code, that big interview I did with Nathaniel Whittemore. I also lay it out in my end of 2023 address there. Also the crypto address that's on, that was last month. It's all there. So please go through, take some notes, have a look at that. On the Real Vision platform, you can take these amazing notes, you can share them, the community can see them. So make sure you have a look at those as well. Start thinking this thing through, start preparing for where this is. The next phase usually happens around this halving period. The next phase is when the banana zone happens. That's when everything starts accelerating. So often we have a slower drag up and then we start going. That's what I think happens. That's the altcoin season. That's when things start to get really bananas. I'm looking forward to that. I'll keep you posted as that starts playing out. But right now, we should be looking for low in markets as liquidity is signaled to improve, and liquidity will start to improve. And then as we go from that, we can look at, okay, how long does this cycle last for? But the back end of this year, it's all going to be about bribing election, making sure you can pay the deficits. And that's pretty much everywhere. Everyone's got to pay the same bills, which is their cost of their government debt. And there's only one way round, and that's more cowbell. Anyway, nothing to worry about. Pretty ordinary markets. It's just something you have to get used to in crypto. So keep the faith. Stay safe out there. Bye.
Thank you for joining us today on this insightful journey into the world of crypto and investing. If you found value in today's discussion and want to stay updated on future crypto news and market insights, don't forget to hit subscribe button below and click the notification bell. By subscribing, you'll be part of our growing community, gaining exclusive access to timely analyses and strategies. I look forward to having you with us in the next video.